So the next session is going to be around one of my other favorite topics, which is insurance and financial services and banking, and and we're going to be talking to two kind of like really, I would say, tech-forward leaders in this area. So Sravan, I don't know if you are able to turn on your video. Let me know. Okay.
Yeah, now it got turned on.
Fantastic. What about Rashu? Rashu, are you on? Let me see if I can. I saw him a minute ago.
There you go.
Kind of. Okay, there we go. Can you unmute yourself, Rashu, or did you see if that works? Okay.
Yeah, can you hear me okay?
Yes, great, thank you. Okay, so interestingly, this panel was supposed to have three people: Anthony from Northwestern, Rashu from Regions, Sravan from Thrivent, and last minute, Anthony had some issues with, I wanted to point this out, with internal kind of like approvals and stuff. So we are dealing with an industry which has a lot of regulation, compliance, and all of that stuff. So of course, we're going to talk about that. But we're also dealing with an industry which has adopted AI, I think, just second to big tech in a lot of ways, because there's a lot of data that they have available and they've actually used it very smartly. So I think we want to kick this off with maybe a 3-minute introduction from Rashu, as well as a 3-minute introduction from Sravan. Both of them have been gracious enough to come to this panel, as well as share some experiences that they've had so far. So Rashu, do you want to go first?
Yeah, thank you, Bindu, and the whole Abacus team for inviting us. Really appreciate the time over here. Just as an introduction, so I had the enterprise data products, essentially machine learning, AI-based solutions here at Regions enterprise-wide. Have been with them for about 2.5 years. Prior to that, I was with Capital One, Deloitte Consulting for the rest of my career.
Sravan?
Excellent. Thank you. Nice meeting you, Rashu, and Bindu, nice seeing you again. And despite some small technical difficulties, I think we are on and live. I'm Sravan Karsala, Chief Data Officer, so I head data and analytics for Thrivent. Thrivent is a Fortune 500 company out of Minneapolis, which is focused significantly on life, health, and annuities. And also, not many people know about $100 billion of assets under management with mutual funds, which are very highly rated, 50. Compared to my last 2 years, I was at Thrivent, exactly completed 2 years last week. Prior to that, I was at Fidelity Investment for about 7 years, and Mass Mutual and GE. So mostly the GE and the GE Capital side, mostly in the financial industry. But definitely what I learned through the years, I can see them coming together in Thrivent, as Thrivent is trying to transform what my Mass Mutual has attempted to do 10 or 11 years ago, and Fidelity has done in many pockets during the time of last 10 years. So that's happy to be here, and love to have discussion, learn, and share whatever that we have been successful or not been successful in the areas.
I'm curious, you're a Fortune 500 and you're not for profit. Are you the only one like that?
We are not. We are not for profit, but it's not a non-profit. So I think
I see.
Yeah,
Okay.
the differentiation, a lot of people miss that. Very simple but subtle difference. The reason it's not for profit is because there is a particular status federal government gives is a fraternal. It started for Lutherans only about 100 years ago as 2 different companies which got merged into. So it was more of a cooperative or association. For Aid Association for Lutherans and Lutheran Brotherhood. These are the 2 organizations in Wisconsin and Minneapolis that which about 15, 16 years ago to become what is known as Thrivent.
Got it.
So there is a fraternal status, meaning tax favorability, which goes back into the community. That's where you see about $150 million from Thrivent going back to the community from various means, where people consider and have seen Thrivent as more charitable than being a financial expert. Yes, that's exactly what the CEO is trying to change, while honoring the roots, but really show the expertise that we have in offering more advice-based products and delivering that financial clarity.
Got it. Fantastic. Okay, so let's get started. So I guess my first question really is to Rashu here. Banking, as I would say, is an age-old profession of IT, right? And obviously super lucrative in some ways. I know Regions is slightly different from other banks because you focus a little bit on high net worth clients, if I'm right, or a different style clients. But what are the most interesting machine learning problems that you've solved over the last few decades, especially, which are unique, a little bit more unique to a bank like Regions?
Yeah, that's a great question. And I'll be a little bit more generic through my career. And certainly that it does include the work that we've done at Regions as well. But, if you look at banking as an industry, we get a lot of data. When we go about doing the surveys for our customers, one of the feedback that they give us is, besides us, you're the one who knows about our financial situation the best. So help us manage the money, help us make the right decision for us, right? And we take that responsibility very seriously, quite frankly. It's a rich set of data from where they're transacting, to their operating accounts, to their demographical, behavioral, the kind of products they do, all of that, the locations where they are spending money and all. For us, the opportunities of AI and machine learning comes in various ways. If you look at what I call as preventing the bad guys to do the thing that they do, essentially it boils down to fraud and anti-money laundering. Cybersecurity is another example of it. Really, across the products over there, from deposit to debit card, credit card, account takeovers, dark web compromises, AML, you've got enhanced due diligence about a customer, complex money laundering, all kind of schemes that happen. Machine learning is a great example, or an AI-driven machine learning is a great example to kind of tackle that problem, because historically we have used some of the sort of rule-based systems to tackle both the problems, and the rule-based systems were good, except that with the age of big data, the fraudsters and the AML bad actors, they started using some of the same machine learning that we are doing it, right? And they started finding gaps and opportunities to penetrate. So it's really, you got to look at the entire set of data, from their biometrics to their, operating account information, trends in their account balances, to the dark web, data that's out there, to their fingerprint, to their account logins and everything, right? So to be able to detect, prevent, and do the right thing while making sure for the good people, we are creating the right kind of experience as well. That's a kind of balance that we do, on our side. But then, it goes beyond that. If you look at, marketing has been a great example of machine learning, where, right product for the right customer, right time, in the right channel. And quite frankly, that's, easily said, extremely hard to do, because it's part of the customer experience as well. And how do you make sure that you're not transcending, the boundaries of, let's say, privacy, or even just plain irritation, to where you're really being effective about providing a product need to the customer who's looking for that product at that time, or a need-based conversation, right? And we do all kind of products, or next best solution kind of products, with our wealth management, with our commercial clients, with our consumer banking clients. Retention, attrition is another example of it. The last area I would like to talk about is something that we have invested a lot and continue to do so, is the conversational AI, and comes in two flavors for us. One is really listening to our customers as a voice of customer program, and proactive, what we call as a listening post. Really, they provide us feedback based on what they tell us in social media, in contact center, and a few others, but also what they do from an action point of view, and combining both of them together to really understand what our customer kind of talking to us about, telling us, how to improve the product, the services, the capability, what next thing to do. that's one part of it. But I think the other part of it is the conversational AI, which is really chatbots and really voice-enabled solutions. That's more automation and efficiency. So those are the kind of spectrums of products and opportunities that I'm excited about and continue to be excited in banking about.
That's great, because I talk to a lot of banks, and you know that we talk to you as well. And I find that Regions is actually a little bit more advanced than most banks, which is great. I know you guys. I think the key insight there was, which wasn't obvious to me until I started talking to banks, is one, and it's very intuitive once you understand this, is in healthcare and in banking is when you have the most amount of data. So you can do a lot of AI with that. But banks have this additional complexity of fraud. I mean, the fraudsters are also kind of like playing the game, right? So that's super interesting, and I'm sure we'll delve into that a little bit more. Sravan, what are your favorite ML use cases? I know you love talking about responsive intelligence. So tell us a little bit more about that.
I mean, I was not going to talk today, but I just saw a comment, I think one of the chats, to say, hey, AI is more like automating and mimicking cognitive, not intelligent. Right on. I think we are not there yet. So I think arrival of AI to be really intelligent to me is when, again, I'll drop in just a simple personal story here and then go there, is, when AI can really help provide the cognitive abilities for people with cognitive disabilities, for them to be able to communicate what they're saying, that's when I see AI really arrived, and really intelligent AI arrived. But until then, let's talk about the reason I also hope for and pray for that is I do have a son who does need that in his life. Older one who is severely communication disabled and cognitively disabled. So that's something that I see when AI becomes really useful for humankind. Until then, we are responding to what we are interacting with. That's where I love the word responsive intelligence. I've been really honing in on that, not just another buzzword, but truly looking at that. So Rashu did cover many cases of where we can apply responsive, meaning machine learning as a technique. I think a couple of areas I'm not going to repeat, but marketing has been always my passion in terms of really creating the response to what customers are saying, personalizing it, having the next best action. It's not only always about the next best offer. How we are trying to use it now and take it further is taking conversational intelligence, taking the machine intelligence, taking the other, all the different behaviors and the data combined, being able to react to at the time of contact. Because financial service industries have not used, when it comes down to the inferences, it's more batch inference and then acting at the time, but as opposed to real-time inference or more inference at the time of interaction. That's where I want to see this to be taken further in terms of delivering that engagement and as well as the marketing experience. But one area which is in the insurance and in the banking, in the investment arena, it's been going is really creating products which are so tailored, because the data allows and the analytics allow and the machine learning allows that to be tailored to that situation. So here is a example where I think it's not a sci-fi, it's not a future. 2030, Insurance 2030, this is an article that McKinsey has put out recently. That tells where we are already headed is, you're about to rent a car and go down on this particular trip. So you're based on the real-time data, based on your behaviors and the others' behaviors, that all the sensors, the code for that particular insurance is just for that.
Right.
So you're able to create a particular insurance tailored, not a generic one that American Express will give you for $25 a day for the travel insurance, but that kind of insurance, and live a pay as you live type of insurance. So it's not like a for life we are underwriting you, or actuarial ones are based on mortality models. So I think we are getting there. We are at the I would say is seeing the tip of the iceberg in terms of machine learning's capability. But these are the use cases where we wouldn't have thought about in the insurance and financial services, where have been more more lagging in terms of adoption, but now there are significant opportunities which will fundamentally change how we live, how we buy, how we purchase, how we utilize these services.
So that's actually very interesting. Whenever I talk to most, you're absolutely right. When I talk to financial institutions, a lot of them do batch predictions. Kind of moving from batch to near real time or real time could give you that extra kind of like knowledge of the just-in-time prediction, so to speak, based on all of the data, right? Yeah. No, that's a very kind of interesting thought, because most people, though, when they want to think about real-time machine learning, one of the things that they encounter is that all of the infrastructure that they've built so far, right, is kind of like all optimized for batch predictions, batch data and everything. And now suddenly you have to worry about streaming data and like, streaming predictions and so on. So the question here is, you guys, I'm assuming, tell me if I'm wrong, are not going to be building these things from scratch. You're looking to tools. It could be that you are. So how are you thinking about that, tools, today? And second, I know banks are always conflicted in terms of cloud versus not cloud, right? I mean, I know lots of big banks still are on-prem. Right. So first, Rashu, how are you thinking about cloud versus non-cloud in the next today and in the next 3 years, as well as how are you thinking about tools, open source, vendors, because some of this, it might make sense to buy some tools, right?
Yeah, good question, Bindu. Thank you so much. For us, generally speaking, cloud gives us the hustle. It gives us the speed to the market.
Okay, good.
For people who have been in the on-prem, I mean, they would kind of relate to it. Anytime you've got to increase your capacity, both from a server or CPU or bringing a new tool or process within the company, it takes time. Gone are the days, right? And, here we are moving at a faster speed. So, what we want to use cloud is certainly for flexibility, scale, compute, especially as we go into some of the products which are going to be mining tons of data around unstructured data. Voice of customer, as an example, requires GPUs and GPT algorithms to act on it. I think that's paramount to our success. We're kind of moving forward with that. Yet we aren't there yet. But going back to the previous question that you asked, which is the streaming, it definitely requires a new way of thinking about the architecture completely. You're not going to be able to patch it on the existing architecture at all. And there are two parts of the stream, sort of event-based architecture, if you think about it. One is, getting the data in an event-based architecture or real time as much as possible to the model. And other part of it is, you need to have models as real-time predictors. Because those are the two spectrums of capabilities that you need to have in order to do the right kind of predictions for the use cases. So hopefully that makes sense.
Okay, yeah, no, you are saying that you're open to cloud. So just a quick, very follow-up question there. Do you think you will be able to overcome some of the regulatory stuff there? I mean, I know, banks like Capital One have done this, but they've also had some snafus. So is that doable? Do you think banks will move to the cloud in the long run?
Yeah, no, and this is my personal opinion, so I'll say that. And I was with Capital One, so I was part of the program that led to the cloud migration over there. I think it's, in many ways, cloud is more secure in my mind, in my perspective. Yes. Yeah. It's almost like you're, putting money into a bank vault. And again, it's probably not a right metaphor, but it's always safe compared to putting something in so cloud gives you all the latest security, the tokenization, the best in class and best in breed solutions from a security privacy point of view. The important thing to think about is, what are your security policies and privacy policies? And then, really think about, do you want to have different kind of VPCs from an isolation boundary perspective? What kind of entitlements and policies that you want to have? Because a lot of us get tripped into that. It's not that they don't have all the products and tools and capabilities. Yeah, it's how do you what are your process and policies, and how do you then configure for your use case?
Right.
Very, very useful thought there. I mean, I can more wholeheartedly agree, because I feel like, a lot of the regulation and compliance actually makes sense to me. It's not as if it's too crazy, but it's about how smartly you can implement it and how do you make sure that you are very secure. And I totally agree with you. The cloud vendors actually have more security controls than not. Shravan, what are your thoughts about like the tools and cloud versus on-prem?
I don't think it's about cloud versus on-prem, right? It is also not about 100% cloud. I don't think that is ever going to be happening. Even in I think in a utility situation, if you see, or even in the bank vault situation that Rashu mentioned, there is still both are there, both in existence, but the gravity will shift. No question, gravity is going to be shifting. We are already seeing it, but gravity will shift predominantly for the major workloads. It will still be cloud. I know we give regulators not their due credit. They're trying to, I think a lot of regulators, FINRA itself is already completely on the cloud. So it's not fair to say that they're restricting, but they're asking us to be having that capability that you're able to both provide that explainability. I think it's a lot of times for machine learning, it's coming down to explainability of the models. It's not necessarily the security aspect.
Got it.
I mean, whether it is SEC, whether it is the insurance commissioners have been, I think New York and Wisconsin have been really, really restrictive, but we see a big turnaround coming. They are much more open to AI, but their concern is not the security and privacy aspect. There are privacy laws that we have to all comply with, but their biggest concern is the bias or the discrimination that the models can be impacting. So if you're creating your models in a way that you're now based on a gender, race, and different aspects that you're going to do, I think biggest concern there for the regulators now versus 10 years ago, not about data security, not about even, I mean, privacy continues to be, let's keep that aside for a minute. Their biggest challenge seems to be in the explainability of the models, being able to show that just like in the before the machine learning itself in the trading industry, in the trading world, I mean, FINRA always asked about really proving that you supervised your investment advisors. So Fidelity as a 10,000 investment advisors, you have to prove that you have supervised. So similar to that, they're asking you, prove that your model worked the way it worked. And you haven't, if there was an inadvertent risk-based investment decision or advice given to somebody, that you're able to prove that it indeed did its job. So I think it's coming down to explainability. It's coming down to model management. It's model monitoring. That's where the regulators are more focusing on as opposed to security.
Yeah. I see what you mean. So what you're saying is models which have kind of like a history or a log which is explainable and interpretable in the long run might actually be the right move, right? Even over and above even like kind of human decision making to some extent. And I see a lot of vendors actually working on these very important, features, explainability, bias, and ethics, and so on. What are your, how do you guys think about, let's say, vendors today? Are you into cloud? Are you like looking at some specialized vendors?
Yeah, I mean, for us, I think it's been not everything to be roll your own. I mean, obviously, yes, can you create a lot of, good Spark framework and continue to write code through that, and also do a lot more of ground up programming, including the data preparation using code. No, I think we're going to be a good combination, a good balance between the tools and engineering aspects of that. So when it comes to the platforms, I think it's given. On the cloud, there are multiple platforms, not necessarily particular logos to be mentioned, but on the cloud providers, there are many platforms which are able to provide that real grounding in the framework and the base needed for it. Definitely streaming. So Rashu, I think you mentioned about real time. How do we get to that one? And this is where there is another phrase, a hashtag that I use, Bindu, is about really frictionless data flow. Let the data keep flowing. I mean, batch inference and batch prediction is not going away. Absolutely not. You cannot, in practicality, with all the compute, you can't process everything in real time.
Not logical, yeah.
You have to process it, you have to have it, but again, continue to have data as it trickles through, that we're able to apply that inference at the right time, at the speed of whatever that interaction is. I think that's where I think technologies, obviously platforms are helping. And I think more and more, just like the way early days, everything was programmed and coded, to then packages came and then solutions came and platforms came. I think exact same thing is happening in machine learning. We are looking at definitely the different options.
So it's a hybrid option. Okay, got it.
It's a hybrid option.
Yeah, it's a hybrid option. And so, Rashu, since you guys actually have been doing ML for a long time, that's my understanding, right? So this happens even in other companies. Actually, a company like Google, this happens a lot, which is that, you know, if you are an early adopter, it's actually kind of a double-edged sword, because you are now early adopting some, like, you know, older solutions now, like no longer kind of like the, you know, thing. How do you guys think about that? Like, you know, maybe you have all your data in some database, data warehouse on-prem, and it's not easy to just move. And maybe it doesn't make sense. So what's the overall kind of strategy / thinking around those kinds of things?
Yeah, and Bindu, hopefully I'm answering your question. Let me know if I'm not. But, you know, I think we did have, to your point, some really early wins, and some of them are low-hanging fruit. Some are, you know, problems where we could easily apply machine learning. It was no-brainer kind of a thing for us to do. As we got, you know, over last 5 to 6 years, you know, I think we've mostly taken care of the low-hanging fruits now, but, you know, it's really figuring out more, I would say, sophisticated problems, if I can say, or more end-to-end solutions, you know, overall. And that's been a journey, and that does require, you know, standing up capabilities over the last few years on data lake. MLOps is an example of that. You know, we're investing really heavily into that area, as well as just building into new set of, you know, tools and technology and algorithms around, you know, we talked about the vendor products, right? Some of the conversational AI, there are niche market products or players there. We definitely want to partner and have been. So that's a spectrum that we are into, where we've got some foundational set of capabilities in terms of where our data is, you know, and even data management. We've done some low-hanging fruits. We are starting to apply more advanced set of use cases and kind of partnering or doing some of those in-houses to make that happen.
Got it. So you're kind of moving to the new stack as you keep kind of the stack around as well. That makes a lot of sense. So given that this, you know, we didn't have Anthony join us, we're going to kind of like, you know, kind of wrap up that this panel in about 5 minutes or so. And also because Philip, our next panelist, you know, has a hard stop. So I wanted to like ask, because I have you guys for just the next 5 minutes, I wanted to ask you a couple of kind of like questions around the future. So the first one is, you know, how do you see something like AI and ML, which I think all of us believe is going to revolutionize the whole world, like how we live and everything else, right? So I'm guessing it's also going to revolutionize your industry quite a bit. And so one option is just in time, which I think is definitely going to happen sooner or later. What, if anything, do you see as the most exciting kind of use case that's going to happen over the next 2 to 5 years? Like, what are we going to look forward to in the banking and the insurance world?
Yeah, for me, I think it's about transforming banking similar to, you know, other industries have done, like Google and Facebook. They've really taken recommendations, you know, real time. Banking, people are starting to get used to how to manage money more effectively, how to use the bank more effectively. And for us, the opportunity is really not send them an email or, you know, or a text 2 days later on, but it's real time. How do we provide a you know, more concretely or succinctly, a virtual assistant banker, which is providing them recommendations, watches their money, you know, gives them guidance, you know, be effective with that, while ensuring the boundaries and balancing the experience part of it, right? And I think that's personalization. One-to-one personalization is going to be a big part of banking, especially as banks are ramping up on the digital acceleration side. And I think that's where I see, really a lot of innovation, a lot of capabilities standing up as well.
So an AI banker. Soon we're each going to have our personalized AI banker. That sounds cool. Sravan?
Yeah, I think that's within the financial services. That's where it's the advice. I think it's a financial advice. I think, yes, banking is part of it, and you're talking your protection and your retirement planning. There is a whole lot of a financial journey that everybody goes through. Being able to have the financial advice enriched and both, not only taking the life stages and the life events and also the current situation of interaction into consideration, being able to effectively do that, but also scaling the financial advice and planning to masses through robo-advice. I think that's something that you have already seen Fidelity's and the Charles Schwab's and others have done it, but only done it in the equity market primarily. But taking that and furthering that in the entire financial journey, that's where I am more excited about seeing that. But end of the day, not replacing that financial advisor completely, but in really augmenting their abilities to make those recommendations and then personalize it at the level that is suitable for each person.
That's great. Just-in-time banking, just-in-time insurance, and just-in-time financial advice. I feel like that all will be revolutionary and will happen. Thank you, for both of you for coming and talking about these two very interesting spaces. So we're going to try to transition to the next. Yeah, can you take a question? It says, yes. If somebody has a question, please go for it. I think there's some questions around. I'm still thinking about an expert. How do you recommend? Sorry, I'm just looking at this questions here. Can you speak about the relationship between actuarial science and AI in insurance? Is that something you want to talk about?
I'm not an expert in actuarial science, but I see logically, I think actuarial science applied the statistics and applied a lot of, let's looking back data, right? Whether it is mortality data or morbidity data, you're looking back to really come out with a more of an estimated prediction, as opposed to now I see there is a chance to now further that. That's where I was talking about more real-time, just-in-time policies, just-in-time protection, pay as you live type of scenarios. I think that's where ML can then start making that risk to be not just based on the experience, right? Actuaries look at only experience data. What has been our loss experience? Okay, mortality, morbidity, and loss experience. Primarily, this is the three dimensions. I know, somebody who is an actuarial scientist can probably tell a lot more about it, but I see these three as big dimensions that are applied in deciding the pricing or the decision for somebody to say, what's going to be your pricing for the risk? But what AI/ML, let's call it ML, not call it AI yet.
Yeah.
ML is doing is ML combined with more free flow of data. Now we are able to apply their behavior data personalized to a person, not just a category of a person, look-alike as actuarial models are doing. I think that's the actuaries are still doing for a broad spectrum of people versus personalizing. I think that's where ML can really bring it.
Perfect. Makes a lot of sense. Thank you so much to both of you for attending the panel. Would love to have both of you in our in-person conference as well later this year.